We are focusing on alternative investments. If you are frightened off traditional equities or debt at this point, perhaps precious metals might suit you. Joining us once again, legendary investor Jim Rogers, who's here to talk investing in metals. And it's not too late to send in your questions, investorsclinic.cnbc.com. Jim, welcome back to us and thanks for hanging on. Let's get to some more questions for you. Lawrence writes in, like you, Jim, I've been dealing in gold for about 30 years and bullish. 800 an ounce sent us forward to $1,500 to $2,000 an ounce. What do you ultimately think the upside could be for gold when you adjust for inflation?
Well, if you adjust for inflation, it should certainly be back to 2,400. That would be the old high adjusted for inflation, from what I can read. But I would suspect it will go much higher during the decade because governments around the world continue to print money. Paper money everywhere is being debased. I mean, if the U.S. dollar turns into confetti, there is no high for the price of gold because the dollar will become worthless. So I'm not selling my gold. I have it as an insurance policy in the first place, but in the second place, I have it as a way that I expect to make a lot of money given the world we're going to be in for the next 10 or 20 years.
And Franjo,
don't sell your gold.
Yeah, Franjo writes in connection with that, and his question ultimately is, what more QE do you think we will get from the central banks, and how much lower will we then see currencies fall against gold, i.e. how much higher will gold go? I think you kind of answered that in part, but on this issue of QE, do you think the ECB ultimately joins the QE party, and does the Fed go again, and if so, when?
Well, first of all, Jeff and Franjo, the Fed is already back in the market. Jeff, back in the first week of August when Mr. Bernanke announced he was going to keep interest rates low for 2 years, if you get out the numbers, Jeff, you'll see that M2, unadjusted M2, shot up at the same time. He's in the market, Jeff. He's lying to us again. They're there. You can't just say, I'm going to keep interest rates low for 2 years. You have to do something. You think it's that easy? If we said that, I could say, Jeff, you're going to be rich next week or 2 years. It doesn't work that way. He's in the market. When you pump up the money supply, the only way you can do that is to buy something. He's in there buying something. He's lying about it. Now, will the Europeans come in as well? I suspect not. There are too many Europeans who are very much against that policy. Of course, there are a lot of people who want a free lunch and want to get bailed out. But fortunately, there are more people in Europe who say, no, we won't do that. So I'm not so sure you'll see. If you do see it in Europe, it will not be to the same extent as in the U.S. or in Japan.
Doesn't that, though, condemn Europe to an even more difficult decade? I mean, ultimately, if the ECB steps in at this point, it will alleviate some of the near-term pressures on these debt auctions, Jim.
Jeff, when you say alleviate, depends on how you look at it. The solution, Jeff, to too much spending and too much debt is not more spending and more debt. If you look at what all the projections for all the European countries, they all show that debt's going to be higher next year, higher and higher the year after that. Nobody shows debt going down. This situation in Europe is getting out of control. It already is out of control in the U.S. You're going to have to take your pain sometimes, Jeff. If you did it now, you could ring fence everybody. The banks would survive. Some banks would survive, but the system would survive. But Jeff, right now governments have some credibility and some ammunition left, at least in Europe. If you wait a year or 2 or 5, when the market forces you to deal with reality, then the countries and the banks have no credibility. They're out of control, and then the whole system gets crushed. I'd rather take the pain now than when the market forces us to take the pain, and that could be the end of the system.
So Nicholas writes in and says, what is the probability in your mind then that the euro will survive the current crisis? And if that probability is not high, should other European investors who have most of their wealth in euro-denominated assets shift into other assets like gold or Scandinavian or Asian currencies?
Well, Nicholas, I own the euro, first of all. Not as much as I used to, but I own the euro. I also own some of the alternatives you said. The world is full of risk right now, especially with paper money. Yes, I own Scandinavian currencies because they're probably less risky than other currencies. But Jeff, to this point, you know, 20 years ago, Scandinavia had the same problem. But in Scandinavia 20 years ago, they sat down and said, okay, we've made mistakes, you're going to fail, you're going to survive, we're going to ring fence everybody and start over. It was a horrible 2 or 3 years, Jeff, but since then, Scandinavia, especially Sweden, which bore the brunt of it, has had a wonderful rise for the last 15 years or so, and Sweden is now one of the most stable and solvent countries in the world. That's the only way that's going to solve the European problems. But back to Nicholas's questions. I own the Swiss franc. Nicholas, I would urge you, if you have all of your money in anything, to be very careful. These days, some are going to totally disappear. Some are going to survive. I own the Swiss franc. I own the Japanese yen. There are some things which I think will do better than others going forward. But I do own the euro as we speak.
Stephen writes in with a question on correlation for you, Jim, and he asks you in the context of gold and why gold seems to have lost some of its defensive luster and appears to have started moving in lockstep with other markets at this point. He says it seems counterintuitive considering governments are not solving their debt problems. What would it take for gold to start moving inversely to the markets again?
But Stephen, you're just talking about a short term of several weeks here. I mean, gold has been being inverse, and all commodities have been inverse to stocks for 10 years now. Don't look at something over 3 or 4 weeks or even 4 or 5 months. Yes, gold, as I said earlier in this program, gold has been up 11 years in a row. That's very strange. That's very unusual in the investment markets. Gold is overdue for a correction. Let it correct. It's not the end of the world. Gold will go back to doing what it does best, but it will be based on gold's fundamentals, not on somebody else's fundamentals. And perhaps somebody's going to come up with a way to paper over the current crisis in Europe and America. If that happens, we will know why gold is consolidating and correcting, why it might consolidate and correct for a while longer. But gold will continue to do what gold does best. Just give it a chance.
Question from Victor, and it's on inflation, Jim, and the impact of some of the falling prices in commodities and what that will mean for inflation. What do you think of the impact of the recent 3-month decline of basic and precious metal prices on global inflation? Will it really push inflation down, or are other elements such as food and oil more dominant?
Well, I own all commodities. I especially own food and precious metals. But first, I have to remind you, Stephen, that in the last few weeks, MF Global went bankrupt. Now, MF Global was a huge player in the commodities markets. There's a lot of artificial forced selling going on. It's artificial selling. It's forced selling. When a huge player goes bankrupt, it has a lot of ramifications. Once this is passed, I would suspect that commodities will continue to go higher and that you will continue to see more inflation. The governments continue to print money. I don't like it. That's all they know to do.
Ray writes in, and he comes to us from Florida. Thanks for tuning in, Ray, from North America. He says, any suggestions, Jim, on establishing a directional trade on platinum?
I own platinum. I'm not very good at directional trades. I know there are people who are good at that. I'm not one of them. I watch CNBC. They have guys like that all the time.
Your faith, Jim, on CNBC and us getting the directional trades right here, at least the guests we have on, of course, one of which is you. Let's just wrap up here with a broader question on what do you think will be the best performing asset class over the next, say, 3 to 6 months, Jim?
Oh, Myanmar. I mean, wildly bullish on Myanmar, Jeff. If I could find a way to put all of my money into Myanmar, I probably would. Myanmar is at the place where China was in late 1978. They're opening up. They've changed. They're going to go the way that the rest of the world has. They got 60 million people. They're right there between China and India. I cannot think of anything in the world on which I'm more bullish than Myanmar as we speak.
Jim, it's been a real pleasure. Thanks for giving us so much of your time for the program this morning. Jim Rogers, chairman of Rogers Holdings.